and let's connect back with Mr. Kamal Gupta. Kamal, thank you so much for joining in with us. And what I was talking about is in terms of the orders that you have recently won. So in terms of what is the pipeline looking like for your order book, and also if you're going to give us an understanding in terms of the revenue for FY25, what is it that one could expect given that you've been receiving so many big orders?
Thanks. So for FY25, we are looking for a revenue of around 5,500 to 5,600 crores. And we may further revise our growth revenue post Q1 FY25, looking at the execution pace. And as you said, we are confident of achieving a $1 billion revenue by FY27. Our order book, as on FY27, we are looking for around 25,000 crores. This year have been very good for us. We have secured 3,800 crores of projects in Q4 only. And our order inflow for FY23-24 is 11,861 crores, taking our order book to 21,000 crores as on December 20, as on now. Yeah. And the order pipeline also looks to be healthy. We are in a process of bidding for around 40,000 crores of projects in coming 6 to 9 months. Though, because of the elections, the order will only start after mid-June. So we are confident of taking another 6 to 8,000 crores of projects in coming year of FY25.
Yeah, because over the last few years, we have seen that the order inflow has been to the tune of around 2,500 to 3,000 or 3,500 crores thereabout. In FY25, you're expecting it to increase. I asked that question because for a large part, or at least 3-4 months, there'll be that model code of conduct and the election impact also coming in, right? So on that account, what's a realistic order inflow expectation that we should have for FY25?
So we are expecting, as I told you, 6 to 8,000 crores of additional inflow in FY25.
Is that number? But secondly, I wanted to understand, recently we have seen that Metro, of course, were, forming the largest contributor in terms of the revenue. But going forward, do you plan to, further diversify a lot more into, say, roads and water projects, etc. as well? Or do you anticipate that for the next 2 to 3 years, the kind of order pipeline that you see, it's going to be largely Metro denominated in terms of the revenue profile?
Well, see, J.Kumar is always focused on profitable growth. So we are more focused on bottom line rather than top line. And so all of our secured orders of this 21,000 crores are with secured 14%, 15% operating margin. So Metro being our forte will, of course, be a major part of the total order book, though it is right now around 40-45%. Railways is Metro, and highways, elevated corridors, tunnels, again, will be a big chunk. Elevated corridors, we have secured around 4,000 crores in Chennai. Dwarka Expressway, we just opened. And we have bidded for around 20,000 crores of projects in elevated. So I feel whether it's Metro or whether it's elevated, we work in a very niche area. So all the projects where it gives J.Kumar a healthy margins, so we focus on that. And Metro, of course, will be part of us for coming 4-5 years because there are a lot of projects coming in Metro as well. So I cannot say whether it will be the major portion, but of course, it will be a prominent portion of the total order book.
Right. So yes, you just touched upon a point that, you're expecting that margins at 14-15%. So that is what will be continuing even going forward in the next couple of years is what you want to maintain at?
Yeah. So all our projects as of now, with secured 14% to 15% margin, and we are looking forward to increase this target to 15 to 16 by FY27.
Okay, so 15 to 16% kind of EBITDA margin over the next couple of years. But largely, originally you were just a Maharashtra-based company. Then there was some sort of expansion to Tamil Nadu and the nearby regions as well. What's the idea to further diversify, let's say, into Northern India, Central India, or you continue to focus on your forte, which you talked about, Maharashtra, Tamil Nadu, and the adjoining regions?
So right now we're working in 6 to 7 states. And as you said, the South was our first time and we entered in a big way. We are doing 4 elevated structures of 21 kilometer double decker, first time in India, of NHAI costing 3,700 crores. Plus we have taken an additional project of 600 crores for the state of Tamil Nadu. We are also quoted for projects in Central India like Bhopal Metro, MP. We are doing in UP and we are also like quoting for Patna, Agra Metro. So like, there's no constraint as such for like, though like, if it is of our choice of work, we will go anywhere pan India. So there's absolutely no constraints working anywhere. We have increased geographically also in this 1 year and vertical wise also. If you like, we have entered into water projects, tunnel projects this year as well. Like similarly, we have our increase of footprints to south. So I think whether it's geographically or vertical wise, J.Kumar does not have any constraints going ahead. It is just like we should get the healthy margins what we look for.
And just lastly, I just want to know in terms of the debt also for the company, how do you plan on reducing the debt? Any strategy that you have there?
So if you see our debt is 620 crores, which is like a 0.2x, which is very, very healthy as compared to the peers. And our net debt is almost zero. So it's a net debt-free company. So I think we are not heavy on the balance sheets at all. And going forward, I think we'll maintain this debt, which will be around 0.2 to 0.22.
Okay, on that note, we let you go. Appreciate you making time and speaking with us. So that's the latest coming from the management of J.Kumar. Of course, they're looking at diversifying both the geographical presence as well as the nature of the work, but the focus continues to be on the bottom line, and margin expansion is also something that they are watching out for.
If you like this video, then like, share and subscribe to ET Now.